This recent banking crisis in the US came as a surprise to many. Even the Fed is trying to contain the damage, but as a smart investor, you need to be aware about this evolving situation, and I will share my perspective about it. Hi, my name is Sunny, and a quick like, share alongside smashing that like button will be highly appreciated. Depositors at First Republic Bank pulled out more than $100 billion during last month's crisis. The fear is it could be the next bank to collapse after Silicon Valley Bank and Signature Bank. In order to cut costs, asset sales, restructuring its balance sheet while laying off close to a quarter of its workforce is on the agenda. In spite of that, the stock is in a free fall. Even though its clients are mostly rich and powerful and they have yet not defaulted on the loans. But massive withdrawals lead to fears as most of the deposits exceeds FDIC's guarantee limits. Banking regulators are worried about dangers large regional lenders pose to financial stability in the economy. The concern is large proportion of deposits in these lenders are uninsured, which could have a compounding effect on other banks in case of a bank run. These global, systemically important banks were identified in 2008 financial crisis. Recently, these regional banks have grown considerably in size and complexity. Surely, FDIC is also aware of the challenges a failure of these regional banks might pose, but reality remains they could not comprehend failures that we saw recently. I believe oversight mechanism failed to forecast effect of rapid rate hikes both on asset and liability side of bank balance sheets. According to the Fed, recent US banking crisis could push American economy into a mild recession later this year. In order to have a softer economic landing, policymakers at the Fed voted unanimously for a smaller rate hike this time. Twin mandates of the central bank are 2% inflation target and a sustainable economic growth. Even though inflation is inching down, yet it remains way off the target. But with recent US bank runs, depositors feel worried. That is why, in order to maintain stability of the financial system, Fed is taking a cautious approach with the rate hikes this time. I am hoping to have a 0.25% rate hike in their next meeting. Recently, there are many concerns about the worldwide banking system. In order to calm the markets, the Federal Reserve and other central banks announced significant US dollar liquidity measures. Some of the European banks are also feeling pressure as the troubles faced by Credit Suisse is a perfect example how interconnected our finances are these days. Some Asian central banks may not be affected by this, but that is by design. Even the Australian Central Bank has indicated a potential pause in their rate hikes. The European stocks 600 index is down recently, and even IMF is now slashing growth estimates. I think everybody in this world will be affected. Difference will be the degree of it. Welcome to the world of modern interconnected finance. While US banking crisis of early this year might have subsided, but some vulnerabilities are still there. In the blink of an eye, Switzerland was close to facing a full-scale bank run when UBS had to take over Credit Suisse. Several other Eurozone banks, including German banking major, came under pressure as investors dumped their shares en masse. It seems direct taxpayer money was not used in bailouts like 2008 financial crisis, but in my opinion, if a major bank collapses, depositors' money could be used beyond FDIC's guarantee limits, which is called bail-in. It has already been tried in Greece few years ago, and we need to be ready for that just in case. Recent US banking crisis, it seems, will affect American economy negatively, which could bring in mild recession later this year. A large bank like JP Morgan Chase can better sustain major withdrawals but could be catastrophic for a smaller regional bank. As a result, lending in mid America will suffer where these smaller regional banks have more market share. Consequently, smaller businesses, which are the backbone of US economy, could face massive liquidity crisis if no remedial action is taken in time. As they are major employers collectively, so huge job losses could be around the corner that might lead to a US recession. If that happens, we need to be ready. So conserve your capital for possible tough times ahead as cash will be king. But that is me. I might be wrong. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.